doing all the last, starting with the financial statements with Davis Park. You're going to start by doing the 3 financials, closing entries, post-closing trial balance, and then starting 4 and 5, you go back up here to the top and you start journalizing for next year with these first 5 entries. Now, the Anderson class, we only got to this far, about this far, the first 3. It was maybe even to the first 2, but for sure the first 2. Hopefully we'll get to the 3rd one here. We've got about 25 minutes. And as we go through, about every 5 minutes, I'm going to put up the answers to the income statement, the retained earnings statement, and the balance sheet, and then the closing entries. So in about 5 minutes or so, I'm going to ask and see what everybody's consensus is for your net income on the income statement. I'll begin to put up the answers for that. Of course, you're going to use number 17 for your balances. Okay, we're going to start here with our revenues and expenses to get everything started. Okay, what's the consensus for the income statement? What's your net income for this company?
70,000.
70,000, I agree. So hopefully your income statement looks very similar to this. Got the revenue in the total column, and then all of my expenses in the subtotal. And then finally, revenue minus all of my expenses gives me 70,000 net income. Probably got most of the retained earnings statement done now as well, since it doesn't take too long. Again, starting with what we had originally had, 36,000 in the total column. Adding in the net income, because this time we did have a real net income instead of a net loss. Less our dividends. So the company gained $50,000 this year. Add that into our previous earnings. And then remember, this 86,000 is an important number. It's not just get it and you're done with it. We're going to use that later. Maybe to help remind you, you may want to cross out the 36,000 on your trial balance that you already have. To remind you, we now need to use 86,000 when I go to the balance sheet. I'll go through the balance sheet kind of in a few stages to break it down. First look at the assets. Most of you are getting most of the way through with the assets. So I put all of the current assets together here in the subtotal, and then total out my current assets. I got $83,000 in current assets. Land would be one of those PPE, property, plant, and equipment. Well, this would be the property section. We're not going to get rid of our land within a year, most likely. It's not usual. But these guys are going to change in a year, so that's why we know they're current. Hopefully the person will pay me. If they're not going to pay me within a year, what do you think it's called if somebody isn't going to pay me within a year? It's a long-term loan that I've given them. What would make sense? Think about the liability side of things. If somebody's going to pay me soon, it's called an account payable, like an account receivable.
Would it be like a notes receivable?
Yeah, notes receivable would be something that goes down here in the non-current, should we have some of those. And we will later in the semester, where we'll act like we are a lending institution and how they look at things, lending money long-term. So my current assets, non-current assets added together, an important number here, $203,000. You underline it once if it's kind of a total but not your final total. Now the other half. Broken down my current liabilities. Again, grouping together any account payables that we have or receivables. No need to list them for the public to see who they are. But showing that I owe my workers some money, I owe a service. If you were looking at this from a liquidity standpoint, how good is the company off right now just based on their ability to pay loans? They're pretty good. They only have $27,000 due short term, but they have $83,000 in current assets. So their ratio is a little more than 3 to 1. Usually anything more than 2 to 1 is considered pretty good, depending on the business. It depends on which business it is, but anything over a 2 to 1 ratio is pretty good. This is a 3 to 1. If you're 1 to 1, well, you're kind of just barely making ends meet. If it was like 50,000 and 50,000, that would be a 1 to 1 ratio, and it's not so good that you're just able to make ends meet. If it's ever below 1, like 0.8 or something, that's not good. So total liabilities, once we add in the non-current, that's $67,000. Combine that with my owner's equity. The two key things here, drawings are gone. Those were already dealt with in the statement of retained earnings, so we don't have that. This is a new number, the new retained earnings. Can't use the old one, we already used it. Add the owner's equity plus the liabilities, and you better equal what your assets do. And we do have that. So the next thing on the sheet, after you do the financials, and you should probably just get these done before we end class, is the closing entries. Closing entries don't take too long. There's only 4 of them. Just kind of get in the habit of doing those 4. The revenues first, expenses second, close out your income summary, close out your dividends.